following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Well, hello, folks. This is Larry Pesavento setting in for Basil Chapman in the Tiger Technicians Hour. We switched places today just to confuse everybody, and at our age, that's not a hard thing to do. I posted the chart of the Swiss franc because we've had a request to take a look at this. This goes back about 2 years. You can see here we've had this huge rally here in the U.S. dollar against the Swiss, but we've seen that in just about everything, including the euro and the British pound. And those have been, been acting very nicely in certain areas. So we'll just keep looking here. But today is my show, Still Trade What You See, because he did his show in the morning. Now I understand. You see how easy it is to confuse somebody, especially when they're in the 8th furlong pole. Boys and girls, I want to talk about that dollar for just a minute because here's how it relates to the stock market. You'll be able to see here the SPX versus the inverted dollar. In other words, when the dollar goes down, the stocks go up. So we need to watch that dollar index because it's very, very important to see how this thing works. Since I have a usual group here, I'm going to talk about a couple of markets. One of them, folks, here is this Treasury bond market. This is the long-term Treasury bond chart that we're looking at here. You'll see that we showed a possibility of a 56 handle here. We hit a 55 handle this morning early. We rallied up to 57 and change. But this is very important, folks, because when you're looking at this, you have to pay attention to what is happening to the long-term note market. And I want to get this up here to show you what's up here with the TLT, which is the ETF for the long bond. This is a heavily traded puppy. And you'll notice on the back on March the 23rd, you'll see how the market made that monster high on huge volume. And what we've done now is we've made a big low here on huge volume. The problem is, folks, we have not rallied. We went up 3 days and we come down 3 days. And if we close below that 138 level in the TLT, that is going to be extremely negative. And also, if the bonds go below 55, they could easily go a lot lower. They've been trying to feed us tapioca disguised as negative interest rates for a long time, and now it's appeared that has been fake news, and unless they bring it back in some different stretch of somebody's imagination, I don't think they're going to be talking about that too much anymore. So let's remind ourselves that that's what we have going on here in some of these markets today. But the bonds are very, very important. We'll take a look here quickly at the I want to do this E-mini S&P here to show the folks what we were looking at. We were expecting a rally this morning, and we expected it to get to the 61% retracement. It went a little bit higher. It got up to the 78% level, and then it went right back down again. They're really trying to hold this, folks, at the 3,700 market today. Whether they can do that, and I'm saying they. When I say they, those are the option players, folks. That market is far, far bigger than the futures market, and it's the options players have so much at stake because if they go underwater on some of these things, it makes it really difficult. They have to come in and cover their positions, and that makes the market accelerate even more. So I think that's important. Someone has asked me to take a minute to talk about the head and shoulders pattern, and this is the one that we focused on a couple of weeks ago on my program. And you'll notice here, this is a perfect head and shoulders pattern in Tesla, folks, on the daily. What you want to remember here, the distance between the left shoulder and the head and the right shoulder should be equal. In this case, it's equal. It's 10 days, 10 days. The ratio on the right side, where the market starts to go down, should be lower than the left side, and that's exactly what happens. It can be the same size, same price, but it can't be higher. If it's higher, it nullifies the requirements for a head and shoulders pattern. That's in the book, The Non-Random Walk Down Wall Street by Dr. Andrew Lowe from MIT. And these patterns have got formulas that are just indelibly etched in mathematics, so you got to pay attention to them. You got to remember that right shoulder has to be equal or lower than the right shoulder. Same thing if you reversed it. You would want the higher shoulder on the right side, and that's what you want to be watching for. That's how it defines a head and shoulders pattern. Very, very important. Has nothing to do with the patterns that we use with A, B, C, D, Gartley's, butterflies, and all the others, the 1, 3, 5 patterns. But the head and shoulders does have that stipulation. That book has got about, I think it's 600 and some pages, and some of the most incredible formulas. You think they were landing somebody on the moon, the way they wrote these formulas, but they wrote them for two reasons. One, to prove that they were accurate mathematically, and they found two things. One, yes, they do predict the market with some degree of predictability, and two, they repeat over and over again. There's nothing new under the sun, and that book just proves it. I don't have to read all that fancy stuff because I've been doing this for 60 years, and I'm already a believer of that stuff. Now, I wanted to bring to your attention one of the major stocks that we have. In fact, it is the major stock. It is Mr. Appel. Mr. Appel went to the well with Mr. Turtel. Okay, here is the Apple chart. Going over the last 6 weeks, you can see we've been in a very strong downtrend. Folks, we broke major support at 120, actually 121, and I think we were trading at 119 or something, 118 a little while ago, but that sets up a price objective of 102 in Apple, folks. That's that ABCD pattern that would take you down to that level. That really... unless we can get above 128, Apple's going to 102. Where the market goes or not, I don't know, but Apple has a really good chance of making 102 because that is a very beautiful ABCD and a 382 retracement, and that makes it a very important price objective down there at the 102 level. If you're long under 118, you be very careful because there could be some news out, whether geometrical or whatever you want to call it, physical, economic, political, something could come out to make that market really go bananas. Someone's asked a question, and that is, why has the market broken so much? And I'm going to give you my 2 cents worth. This is as we came in Monday. This is the NASDAQ. This has been the leader of the pack all along. It gave up its leadership about 3 weeks ago. But you'll notice here that we could not make a 382 retracement on either Friday, Monday, Tuesday, Wednesday, Thursday, or Friday. We could not get above that 128.50 level. And that tells us that this market is extremely bearish. And I don't know where it's going to close today, but we'll see, what's going to happen with it. I don't, hey, folks, you got to remember that I don't know what's going to happen. I'm just giving you my ideas of what the patterns look like and, how they work. Sometimes they work, sometimes they don't. If you remember, the last time we were on my show, it was just a couple days ago, we were talking about Dr. Copper, and I put copper up here to let you folks see that we're looking copper to get down to about 390. That's that same pattern we're looking at in Apple, that it should get down to 390, and I'm going to post what it did because you're going to be surprised.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. ride the wave. Sign up for the opening call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I wanted to put up a chart here of the 4-hour Treasury bonds. And, some people, myself included, because I do this, occasionally, more than occasionally, is I'll try to catch a falling knife. Usually I try to let it stick in the ground and then try it. But sometimes you'll get in and try something. And so what I'm going to try to tell you here is about this Treasury bond market picking a bond. I don't know what this means here, but we closed here on yesterday at 157.02. We went down to 155 and change last night. We got up to 157.15. We're trading around 157.05, 06 the last time I checked. I don't know if that's going to be the bottom or not, but let me tell you a story about one of the greatest traders we've ever heard about, and that's Paul Tudor Jones. He was interviewed in the Wall Street Journal in 1987, and the reporter said, boy, it must be really fantastic to be Paul Tudor Jones, who picked the bottom in the bond market before it rallied 13 handles. He said, that's really fantastic. And Paul Tudor Jones says, well, if you're going to report it, he said, report it the way it should be written. And he says, what do you mean? He said, yes, Paul Tudor Jones did, in fact, pick the bottom in the bond market before it rallied 13 handles after he had lost 6 times in a row trying to find the bottom. So there is in the lesson to be learned here. You can try it as many times as you want, but you've got to tell yourself you got to find out how much you risk, because it's not about how much you make on a trade, it's how much money you don't lose. That's the bottom line. So try to keep that in mind. Now, we've had a question from our good friend Marshall, one of our little groupies, I guess. He happens to be almost a family member now. But we have a market that is primed for the pump, folks. Just give me a second here, and we will walk through it here and take a look at it. I will take a look at it in Bitcoin in just a minute. If you'll just give me a second here, get this up here. You'll see here that we are looking at a 3 drive to a top pattern. This is a 4-hour chart, goes back a couple of weeks. We were looking for the market. The actual number we were looking at was 65.56. We got as high as 66.20, I believe, so far today, and still going higher. But I said in the video that I sent out, I said this is not where you try to catch that falling knife. I said, what we're going to do is we're going to wait and try to find a pattern that lines up after the top is made. We won't get the exact top, but that's not important because there's going to be plenty of juice on the downside when this puppy rolls over. But what we have to do is just find a spot where we don't have to risk very much. And that end is where we try to work on it. And I'm going to show you one here in the British pound. We tried this British pound on the way up, and we lost a quick 40 points, which was $260. And our game plan says, well, what we're going to do is we're going to wait for the first ABCD. We got that at the 140 level. We hit just under 138 today, I believe, or very close to it. No, yes, a little below 130. Below 138. So that has a two-handle profit in it of well over $1,200. And it also has a profit objective possibly down at 136. That's a very large ABCD. But here again, that's that same pattern that you're seeing in Apple. There's no difference. These things all go up and down with the ABCD patterns. The only thing the market can do, folks, is it can do three things. It can make ABCD on the upside, ABCD on the downside, or ABCD sideways. So that's the main thing that you want to sort of keep an eye on. Now, we confirmed the book. Okay, someone's asked a question from one of our listeners, Max, down in Fort Lauderdale, Florida. The book is by Dr. Andrew Lo, L.O., from the Massachusetts Institute of Technology. The name of the book is The Non-Random Walk Down Wall Street. There's a big difference here, Max, because there was a book written called The Random Walk Down Wall Street by it slips my mind. That was Burt Malkiel was somebody else. I can't remember who wrote that book, The Random Walk Down Wall Street. And what happened? This is a really good question, Max, by the way. In the year 2000, Andrew Lo from MIT came out on April 17th, and he put an article in Business Week that said, there is pure gold. And this is something like that. And it said, there is symmetry in these markets, and they're predictable within limits. And so he wrote a book basically the taking away that the market was random. He says it's a non-random market. It's a chaotic market, but within the chaos are non-random patterns that repeat over and over again. Folks, all you got to do is just look at ABCD, and if you don't see that, get you a job somewhere else, because that's the easiest thing you can possibly do. So the actual name of the book, Max, here it is. It's The Non-Random Walk Down Wall Street by Dr. Andrew Lo, L.O. of MIT. I don't remember the publisher. I had the book, Max, but I gave it away because it had so many formulas. It was so far over my pay grade that I couldn't even describe anything. I think I read the first chapter and I said, I'm in big trouble. So I gave it two of the smartest people I know, which is Howard Arrington and John Arrington out of Anson Software, and of course they enjoyed it very much. But they looked like you were trying to put a lunar landing somewhere, because it was so very, very crazy. So you got to remember that if you're looking at this crude oil, what you want to do is you want to let the top come in and then wait for that first little pattern that gives you a chance to enter your risk without risking very much at all. So I hope that helps. You better be good with mathematics, Max, or you're going to be very unhappy, because this thing is, go to Amazon and you'll see the forward, and you'll see all the names of the people. Everybody in there has got double and triple PhDs. And unless you're in that category, buddy, it's going to be a long road to Tipperary, I guess, because it's a really tough one to remember. I think we're on a break now, aren't we? Do we break at this time? Because this is what I usually break at. I don't know. Okay, do we take a break now or not? Because I usually have a break here at this time. Oh, it's at 26 minutes, not 25 minutes. Very sorry. Okay, any other questions you have? 877-927-6648. And we've been asked to take a look at the Bitcoin, and I don't have it. Shut the front door and raise your hand. All I can tell you is there'll be a great deal of support at 38,000. I know the chart because I watch it, but I don't do anything with it, and so I know it's at 38,000 is the one that you want to be watching. What I can do is during the next break that we have coming up here, I do have the one that's listed on the exchange, the ETF, and I'll bring that up. And when we get back from the break, I'll be happy to, give you a quick 2 cents worth. And like I always say, if you paid more, that's your problem, not mine. So we need to watch these very closely. Remember, folks, that we have evaluations now in the stock market that have gone way past anything we've ever seen in anything before. We're so far above where we were in 2000 that it's hard to believe. I think we're at least 40% higher than we were in 2000. And now that we have the Reddit boys and all the other guys, it's going to be a very, very interesting market for sure. We'll watch these for sure as we look at some of these things. Now I think there's a break coming up, and when we do, let me get this back up here. And that's no good. Chart here, we want to go.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we've been asked by one of our listeners to take a look at the Bitcoin. Now, this is the ETF for Bitcoin. trades very actively, folks. There's a lot of boys and girls playing this one, that's for sure. But the two things you want to take away from this, if you see the red ABCD known as the Thunderbolt, that's the Gartley, start of the Gartley ABCD pattern, where AB equals CD, stops right at the 382 retracement and goes all the way up and makes a new high. And lo and behold, you can see by that little pattern that I've drawn there is another ABCD pattern, with A being up there at that 57,800. We came down to 54,000, rallied up to a 61% retracement at 51,000, and that puts us spot on at 39,847. So right around 40,000, we should have some really good support. And if that fails, the only other support it has is 35. Because it goes below 35, it can go to 20 without any trouble at all. Folks, I don't know anything about these cryptocurrencies. I follow them because I know they're coming into the vogue, and more people are looking at them, banks, everybody else. I don't know how they work because they're very, very computer-centered, and I'm so far away from that ballpark that I just sort of run around the track staying away from it. But I keep things as simple as possible. I look at ABCD patterns. I watch how the market's acting with good news or bad news. I watch a few little patterns with ratios, and that's what gets me to the promised land. And believe me, that ABCD is the structure that the markets work on. It's the same way. Now, when markets run like they did in this Bitcoin, from January 25th, it went from 29,000 to 57,000, doubled in price, folks, in a matter of just 2.5 weeks. And that could do it again. You can back there. If you get to 39,000 and start up again, you're looking at 67,000 in Bitcoin without even batting an eye. That would happen in a few weeks or less. So that's why it's so very important. Now, the second thing that could happen here is this Bitcoin has made a low today at 44,000 because we've already rallied 4,000 points up, another 10%. And if that's all there was, that's even more bullish, because if we get above 53,000 now, it's on its way to 67,000. What that means in Satoshis or Beloshis or whatever they call those things, I have no clue. All I know is that when these things do this, they do it for a reason, and you have to be, really prepared to see how these things are going to act. So let's take a look at one other thing that I wanted to bring to your attention, so I don't get you folks very often. So on Mr. Chapman's show, if we take a look at what's happening with the margin debt, you can see here where we are in the different crises. You could look at the dot-com bubble where the margin debt was. We dropped 80% in the NASDAQ. Look at the financial crisis. We dropped 56% in the S&P. In 2008, we dropped 20%. And look where we are now. We're way, way up here with margin debt. And more coming in with all these folks that are the nickel-dimers, or they're not nickel-dimers, the Robin Hood people. Shouldn't refer to them as that. That's a bad connotation. But that's good that they're coming into the market, because you're getting great volatility. In fact, I think there's going to be more volatility coming, and I've said to everyone that get ready, because what we've seen here during January and February is the beginning of what's going to happen through the whole year of 2001. There's just going to be tremendous opportunities both on the bullish and bearish side. But let me reiterate, this number that we're looking at here in the crude oil, it's very, very important. And let me give you one other factor here, because I got you here today, and I want to give you just as much information as I possibly can. This is the report from the Chicago Mercantile Exchange yesterday on open interest. And look what happened with that big explosive move of $3 a barrel to the upside. Open interest dropped. Folks, when prices go up and open interest drops, that is a very, very bearish sign. Now, today, when I check the open interest at the end of the day, if this happened again today with another $2 run, we're just getting that much closer. How much closer? I don't know, but it's 3 drives to a top. But how high that top's going to be, oh my goodness, anybody could possibly take a guess on it. So we could hit $70 a barrel, $72 a barrel, $73 a barrel. Something like that could easily happen without any trouble at all. So we've got to pay close attention to some of these things that we have, looking at some of these things. Now, on the bullish side, I wanted to give the presentation here from our good friends over at Goldman Sachs. And you'll see they're showing that where the price of the E-mini is going to be out into 2022. Folks, I have a hard time predicting what's going to happen tomorrow. Anybody can go out to 2022. My hat is off to them. But you have to remember now, Goldman Sachs is the same firm. When crude oil was trading at $141 a barrel, they put out a special report that crude oil was going to $200 a barrel and all the things that was going to make it happen. And that was the high of the market. And then later on, we found out from their P&S statements who was selling the crude oil up there. Shut the front door and raise the rent. Boy, this is an exciting game when you get it. Remember, folks, when you're trading, they can lie to you, they can cheat you, they can give you misinformation, but the one thing they can't do is they can't hide from you. If prices are going up, there's more buyers. If prices are going down, there's more sellers. And open interest is dropping when prices go up. That means shorts are covering and buyers are leaving the market. So that's why it makes it very, very susceptible to something to the downside. But you don't want to try to pick that top. You want to wait for the top to come in and then take a look at it. You know, you'll be able to find it. Just do like what you see in the British pound or the euro or any of those things. You don't have to pick the exact high. You know, sometimes you can do it. It's great. And if you're wrong, you know, it's like, you know, Paul Tudor Jones. Sure, I can be wrong 5 or 6 times in a row, but when I finally get it right, I will get it right. And that's the whole secret. Remember, folks, the most important cycle that we have when we're looking at this stuff is the 9-inch cycle. That's the cycle from your left ear to your right ear. You know what I mean? That's what's one. You got to, if you get that cycle right, you get the rest of them right. The cycle from your left ear to your right ear. Then you have to be able to come in each day, prepare yourself, be mentally and physically prepared, and be able to decide how you're going to handle your trading plan and follow through with it. If you come in just throwing darts every day, good luck with that, folks, because that is just going to be something of a little bit of a wild thing here. I wanted to show this one other chart as opposed to euphoria and stuff. You'll see that the euphoria that we've had here is equal to everything that we had in the dot-com bubble and then some. So who knows? You know, we've had, you know, there's one stock that do I have it? Oh, please tell me I don't have it. Shut the front door and raise the rent. Folks, take a look at your chart when you have a chance. At the break, I think I'll bring it up. I want you, after we get back from this break, I want to talk to you about Google, because this is going to be a real interesting one to look at. Wait, let me see. You kind of repeat what you said today with ES and short-term low at hand. Oh, yes, I will be happy to when the break comes up, Mr. Z. I certainly will do that, and we will bring that to your attention. When we come back from the break, we'll see how some of these things are doing. And I don't believe, Duffy, those people with getting those government checks are putting them in the market, my friend. I don't believe that. I think they need it for, hey, I'm wrong a lot. You know, what the hell?
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back, folks, and I believe we have Jim from Florida on the line. Jim, are you there? Nope. Guess not. I guess he wanted my opinion of silver. I put it up here. We're trading at $25.15 right now per ounce. I believe we're going to just above $24 an ounce here this early next week. This lines us up with, hold on, someone's trying to reach me here. Let's double check and see where he... Okay, hold on here. Just a second here. I'll take care of that in just a second, Mr.
Larry.
Z. Oh, yes, sir. I'm here. What can I help you with?
Well, I wanted to talk to you about physical silver because Larry Pesavento a couple of years ago said anytime you can buy some silver rounds, buy some, which basically trade at spot. You know, buy some, put them away. And
yep,
you know,
been saying that
that's
for
what
years.
I had done. And now here dealers are actually buying above spot for Eagles and silver
I know
rounds.
they are. I know
dealers
they
are.
They can't get them. Yeah.
You can't get your hands on them. Nobody has inventory. Dealers are buying silver Eagles at spot plus $3.
Yeah.
And so my question is, I know you've got a target on gold right around 1673, I think, and we came close.
Yes, sir. Yes, sir. 16.7. We had 84 last night, so I think we'll be there be it on Monday morning, Tuesday morning. We'll probably be seeing it there.
And I know I might be able to get some either maple leafs at 50 over spot. So that's what I've been working on, physical gold. But for silver, what do you think we could go down to 22.50, 23? Would that be the spot that you would equate to your gold target?
No, the gold target to me is 24.15. I mean, it could go lower, of course, because ABCDs do extend, but I believe 24.15 is going to be it. And the reason why I say that is that we're very close to the 382 on the long-term weekly on gold, which comes in at, like you said, 1673. And if 1673 doesn't hold, that tells me that top that we made last August at 2090 is going to last for a longer time than we might think, because it has to hold that 16. Well, actually, there's about a $40 window there between 1673 and 1633, depending on whether you use continuation charts or spot charts. They argue back and forth. I'm looking at what I'm looking at, which is April gold. That tells me it's 1673. So I think it'll be in that thing. The one thing you want want to remember is if that's going to be a good bottom coming in here the next few days, it's going to tell you it's going to be a good bottom. It's, right. The guys, because the people that have been short are going to get taught a lesson, and gold will usually snap back really quickly saying, hey, don't forget about me. And so I think that's important to remember.
But I'm also looking in September that spike low on silver.
Yes, I remember.
It was right around 21.80, I believe.
Yes, sir. That's why what we're doing.
What's your target on silver then for support?
24.15.
Okay, that's what I will look at.
24.15, and that's what that is. Yeah, that's okay. But listen, the reason why that's important is that's the 78% retracement, which is the square root of 0.618 of the low that we made at 22.10, that fast low that very few people got in on. Remember, we had the really big low back at $12, about a year and a half ago. Then we had another one at 14, and we had another one at 22, and I believe this next one we're going to be having is going to come in at 24.14. But I'm very familiar with the coin situation because I have a lot of friends that are in that business, and they tell me that it's impossible to get the coins. They order them, but they never come in. So the silver's going somewhere, but where I don't know.
Okay.
Okay.
Well, yeah, and I keep tracking. I know there's some monster boxes which are 500 coins of the Eagles, and they are getting $8, $9, $10 above spot, almost as high as $40. But I'm looking at a source that if I could buy $5 over, I would buy that entire 500 box. So I'm just looking for the right price.
Okay, my friend. Listen, thanks for calling in, and we certainly appreciate it.
Thank you. Bye.
You bet. Okay, folks, I'm going to bring up a chart here now that is very interesting because it might not happen, but we got to prepare for it. I'll be with your next question, Mr. Z, in just about 30 seconds. This is Google. We've been here for 3 weeks, folks. You see that little red box? That is an island. And believe me, if you come in someday, and I don't know when it'll be, but if Google closes down near 2010, doesn't violate that box, and that does it on a Friday, or any day of the week is fine, but a Friday would even be better. What you want to do is right at the close, you should buy yourself a put option in Google, because if it doesn't gap down, then you're wrong, and you take that really small amount of a loss. And if it gaps down, oh boy, then look out. Then you got a really good shot. So that's something to really keep a close eye on. You don't see these patterns very often, folks. When you leave a gap from 1950 all the way up to 2000, a $50 gap, and now you've been here for 3 weeks. That's a whole lot of accumulation or distribution. Now maybe it's accumulation, maybe it's just a pause that it's going to go up. But boy, if it does break, it's going to catch a lot of people by surprise, and that's not an easy thing to do. Now let's get back to our good friend Mr. Z here, because he's asked a question about the E-mini S&P. I wanted to bring this up because folks, I work with standard deviations, and what we've done this week here on Thursday is that number that we got down there at 3717. That was 10 points from 3700 was the exact one standard deviation down from the high, and that usually is major support. That's why I thought we would probably get a rally here on Friday. And in fact, we're getting that rally on Friday. Whether it goes through the end of the day or not, I'm not sure, but that's what it appears to be doing. Doesn't mean that the market's bullish. It just means that at that point, the options players came in and said, look, we can't let this go down any farther. And what they do is they start buying the cash S&P to protect their position, and that lets it go. Because if they've written puts, and these puts are getting close to going in the money, they don't want to have anything to do with that. So that's why they try to do that. That's why the standard deviations are so very important, going up and also going down. That's why when we hit the standard deviations up there at that 3930 that we talked about several times over the past few weeks, we'll bring it up again, you'll see that we were right up there at that 3920 to 3950. That was 3 standard deviations, folks, from the previous run up. And boy, that you don't see that happen very often. That was also right at a 200%, line of the Andrews pitchfork line, which is harmonic numbers of how the market, separates. But you can see here, just look at these little spot yellow markers here. Those are absolutely spot on numbers. that we look at. I mean, you can't ask for anything better than that, and that's why we watch this thing. We just look at the mathematics behind it, and that gives us a pretty good idea of what we're watching here, and we'll see what's going on. So that's about it. That's Mr. Z. What the hell is he calling from? Yeah, I think that's it. Are we at a break or something? Oh dear. Hold on 1 second. Hello? Tony, hold on, buddy. I'm on the radio show. I forgot to tell you the other side. Yeah, okay, I will. I'm sorry, folks. I'm not used to doing it this time. Okay, I'll call him back right now.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge heard here at TFNN.com.
Okay, folks, sorry for the phone call, but every Friday for the past 25 years, I've had a young man come to our house, and he washes the car for us, and he does several other in the neighborhood too. And he knows that I have a radio show early in the morning, but I forgot to tell him that I was doing it later today. No problems. The thing to take away from my talk today is the fact that we're at one standard deviation, folks. If we reverse here the last 3 hours of the day, we closed below 3,700. I cannot tell you how bearish that is. The NASDAQ has been lagging. It's trying to catch up, made a little lower bottom today and is rallying a bit. But the real important number is 3,700. If we go below that, that's not going to be good. You remember when we were back there at, I think it was 3,800, we did the same thing. We dropped another 100 handles. So this is could be the start of a big bear market if we go below that 3,700 mark. Keep that in mind because we've been bullish for quite some time in the market, and now it's starting to tell us with the divergence we've seen in the NASDAQ and the high techs giving up a great deal with the exception of Google. You saw what happened to Tesla. We've seen pretty good retracements in Apple. We've seen it in Facebook and also in Microsoft and so Amazon especially too. So these are starting to weaken a little bit. And I know the smaller cap stocks are coming in, playing a bigger part, but that's all part of rotation. So remember, 3,700 is the key level. In the if it's not today, look at Monday. That level is so key. Just watch 3,700 in the spot S&P, which the March is. We'll be switching over to June here in about 10 days. Yeah, in 10 days. So we'll be watching that one also. They're almost the same price, so it's pretty close. The other market that's incredibly important, of course, is the Treasury bond market. Below 155, folks, in the June bonds is so bearish that it's unbelievable. It could hold at 155, could be a major low in here at 155. We've not seen any indication that the Federal Reserve is coming in. So live every day in an attitude of gratitude, and may God bless.